So that is what you forecast happening within the next year or so, getting this regulation cleared out for?
I would say in the next 2 to 3 years, depending on the jurisdiction. In some places, it's already clear.
So Sergey, assuming you're watching the show, you're a retail investor, you see the trend, you see the writing on the wall, how would a retail investor get exposure to the upside of this? Like, what's the play here?
I think generally speaking, Bitcoin is a good index for the whole crypto industry, and generally that's consistently continued to be the case.
But for the tokenization industry, is it ETH? Is it Ethereum? Like, how do you play this trade, to put it that way?
I think that's very hard for me to say. I'm not exactly sure how people would approach that. I think they should have an interest in the real world assets themselves and think about adopting those real world assets, like tokenized gold, tokenized fractional ownership of real estate, tokenized carbon credits. That's the direction I would think about. In terms of all the different technologies, I would kind of just look at the technology that's going to become indispensable to allowing all of this to operate.
Right.
Generally, my experience and my reading of the history of technology is that the technologies that are critical for transactions to happen, for systems to move ahead, are the technologies that when those transactions increase, people are in a way forced to adopt those technologies because they have to adopt them in order to transact.
Right.
So paper deeds might take longer, possibly, but basically all of the assets, including paper deeds, will eventually be tokenized into a cryptographically guaranteed form. You'll have a private key in your phone, and I'll have a private key in my phone. And then when we sign an agreement with e-signature, right? And e-signature was also like a crazy concept, maybe, let's say 30 years ago.
Yeah, sure.
So we'll sign with the e-signature without thinking about it. And then we'll put our thumbprint in or some biometric thing. That'll go to a secure element in the phone that houses the private key. And that private key will sign the transmission of a token that represents the house from your address on a chain to my address on a chain. And we might be on different chains. So your token for your house might be on one blockchain, and my money to buy the house might be on another blockchain. And then we would need to send the money from my blockchain and the house token from your blockchain. And then that has a whole bunch of problems around it, technical problems. Those are the technical problems we deal with and we're figuring out. But
yeah. We being Chainlink.
Yeah, Chainlink, yeah. The e-signature analogy is a good one, right? There was a period where e-signature wasn't
ridiculous, yeah.
Wasn't legally binding, wasn't the thing. People would drive, in your real estate example, to house closings. People would have to drive long distances. I know some of the people that made e-signature successful. So Tom Gonser, one of our longtime advisors, is the founder of DocuSign. And he explained to me that one of the first use cases of e-signature was actually allowing real estate brokers to not have to drive to closings,
sure, yeah.
Right? And one of the big tipping
factor for sure.
And one of the big tipping points for e-signature was actually the U.S. Congress ratifying a law that makes it legally binding. That's actually the place we're at in this industry, where regulators in various countries, clearing and settlement facilities, central banks are now realizing that they are a blocker to more blockchain adoption because the banks, the asset managers are hounding them for clarity. People like Larry Fink and others are saying to them, I want to do more of these transactions. I don't know what's legal. I don't know if I do this, is it legal? Is it guaranteeing me something legally? And so now this year and next year, and this is some of the conversations I've been having over the last couple of months, meeting with central banks and clearing and settlement depositories and exchanges and regulators. Now we're in this world. We're kind of at that tipping point where people see the value of this, and the regulators, the lawmakers, the central banks, the CSDs are all now starting to create what they call frameworks, regulation frameworks. And those regulation frameworks will create the legally binding force that will allow the remainder of the world to transition their relationship with assets and value and the data associated with those assets and value into this format.
Right.
So this year, next year, we're literally at that point where like you're gonna get the equivalent of e-signature legislation, and that is going to be one of the big unlocks for opening the floodgates of adoption. You have a $2.5 trillion public chain industry. You have the biggest asset manager in the world saying that all of this is going to convert. And you have the three largest clearing and settlement systems of the world at this conference announcing a joint digital asset control principles framework, which they, I think, announced yesterday. So even with these limitations, right? And the way to think about that, in my opinion, is every technology kind of gets to a point and then it reaches diminishing returns. It can maybe do another 2% increase or 5% or 10% increase. Internet technologies have reached that point. Internet technologies can improve another 5, 10, something percent. Blockchain technologies are in the early to mid stages of their development, and they can improve hundreds of percent.
It takes some power and control away from the big players, from the institutions, and brings it back to the individual.
Yes.
So why are the big institutions pushing for this? It seems like it could be counter to their interests.
It's inevitable, and if they don't participate, they will lose usership. So these are very smart people. Like the wages that people in banks and asset management get are on the high end of all wages. This attracts people for very, very smart. They're not dumb people. I interact with them on a daily basis. They're very clever, smart people. It's not like there's this huge monumental structural shift in how all value is managed and secured and transacted. And they're just going to sit, and the numbers won't go from less than 100 billion to over 2.5 trillion in the crypto industry.
Right.
And they're just going to ignore it. This is just an inevitable reality because of the benefits of this technology. It's like, right now, the internet is obvious to everybody, right? It's obvious that we communicate over the internet. We do Zoom calls, we send emails. 60s and 70s, you ask people about the internet, they're like, why would I need that? But the benefits are obvious now, right?
So if you can't beat them, join them.